A stock market crash may be coming. Well, that's according to the research of CFA Michael Gayed. Now, Michael Gayed is the creator of the Lead Lag Report. A cornerstone within his research highlights the lumber to gold ratio and how its movements can predict a drawdown in the S&P 500. As we all know, gold as a safe haven is a safe haven. Guy had noted that rising gold prices tend to precede higher levels of implied volatility within the market. And lumber, on the other hand, is tightly correlated with the housing market and overall U.S. economy. When those prices dip in lumber, you tend to see a rise in gold. Now, you may be slowly putting the pieces together as far as what I'm trying to insinuate here, but let me show you some charts of lumber and gold so you can get a clearer picture of what I'm trying to say. But first, check out the first link in my description. I'm building a waitlist for one-on-one video and audio calls so you can speak with me personally regarding gold, silver, and your finances, as I am getting my certified financial planner designation, which would make me a fiduciary to look out for your best interest. Now, let's take a look at the lumber chart, shall we? As you can see here, on May 7th, we hit a high in lumber prices, but since then, those prices have tumbled down to their current levels. According to Gayed, this means that there could be some downward pressure coming to the economy, which tends to be reflected by the S&P 500 ahead of time. As lumber is a major component of housing, we can see other data coming in that confirms this housing issue. Recently, we just got the new housing starts or existing home sales data for the US. And again, it's edging down. And as we have been seeing since January, those existing home sales have pretty much been edging down. Now, that's within the present time, but what about building permits? Building permits are looked at as being a leading indicator for the housing market. And as you can see here, since about April, from a near-term high of March, we've pretty much been seeing a downward trend here in building permits. So the authorizations of building permits within local jurisdictions have been decreasing. So as we're seeing that decline since April, the overall U.S. economy might potentially be slowing down as it is heavily tied to the housing market, giving levity to assets such as gold. Now, lumber prices started dropping in early May. Right before then, as you can see on this graph here, gold prices started to rise significantly. Of course, we had a pretty strong drop recently, but that rise coinciding with lumber prices continuously dropping is starting to make some wonder, is there a crash or a correction coming within the market? Now, going back to that original article that I showed here, Christina Hooper of Invesco down here seems to think that there could be a 10 to 15% drop within the S&P 500. She even says that she would be a buyer if a pullback of 8 to 10% happened, and this could be a significant opportunity for investors who have been waiting for prices to decline. But guys, let me know what you think. Is gold's rising price, and I know things have been a little bit slow recently, but generally, the rising prices of gold and lumber's falling prices, do you think that they predict a drop in the market? Let me know in the comment section below. Thank you all for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.